We went into the actual gym together. I went there with this guy. We walked in and he had been fighting with them to try and get this removed because they had signed him up. And he was, he was too young to actually sign a contract on that. And they were holding him obligated to this. So we went in and... On this episode of the House of Cars podcast, we go into the car buying experience. We get into the nitty gritty about the do's and don'ts and what the experience should feel like. As well, we dive a little bit into interest rates and what to expect when purchasing a vehicle. All right, welcome back to the House of Cars podcast. I'm Steve. I got Nick back with me here. Welcome back.
Thank you. It's a pleasure to be back.
Today's episode is all about educating our potential clients, right? So we have a bunch of myths in the auto industry. We have a bunch of stigmas in the car industry, right? And I know that you face this. I've faced this a couple of times before where people say, I'm going to be taken advantage of.
Yeah.
Right?
All the time.
All the time. That's the biggest hurdle, in my opinion, that we have to get over.
Half the battle is actually getting people into the dealership because they're so scared from these other big box dealerships.
From stuff they've heard, it's the word of mouth gets
bad
out,
experiences. Right? It seems like negative news spreads faster than positive news, right?
Perfect. Exactly.
We're here to end that.
We're here to end that, and the fastest way to end that is by giving information, right? So we're gonna rip the layers off of this, dive into a couple key points, and explain how everything is actually put together, just to debunk some of these myths that people have.
They have to be,
right? So ultimately, when you're purchasing a vehicle, you're buying something that you're using. Right. So the biggest disclaimer overall is vehicles are a depreciating asset.
Yeah, we can all agree on that.
Right.
For sure.
You're driving it, you're putting kilometers on it, you're using it. Right. It's going to reduce in value no matter what, whether I own a car, you own a car, whether like I sell a car to my aunt or uncle, anybody who's driving a vehicle, that vehicle is losing value over time.
Yeah.
Right.
Yeah, we're all in the same boat, especially even coming from the dealership side. The cars, they sit on the lot longer, they become worth less, right? So we have to move them quicker and make sure that we have inventory that there is fast turnaround on, right? That giving the people the cars that they want and not just getting cars that we think they want.
Absolutely.
Right? So we keep our finger on the pulse of the society of the cars we like.
Absolutely. So biggest one right off the hop, interest rate.
For sure. Interest rate is, lots of people think that the dealership makes the interest rate or whatever it may be. The interest rate is actually based off your credit.
So if I come in and, hypothetically, I have a couple, credit cards that I'm currently behind payments on, what should I expect?
You'd expect a higher interest rate for sure, right? The bank takes into account your entire credit file, how long you've been on the job, the meat and potatoes of what's actually on your credit file, like your credit cards, phone bills, previous car loans, whatever it may be, student loans even. And if you're paying those poorly, why would they be inclined to give you the best interest rate possible?
So what you're saying is if I have demonstrated good financial responsibility with past decisions, I have earned a better interest rate.
Exactly.
In the eyes of the bank, you say.
Exactly. I always say, like, to kind of simpler terms, interest rate is more of a trust factor, right? And so say you have and like a risk analysis. So if you have a buddy that's like, hey man, can I borrow $100? So what you're going to do is you're going to ask your friends, be like, that he borrowed money off of, and be like, hey, how did he pay you back? Did he pay you back on time? Did he pay you back the full amount, or is he still owe you money? And if they're like, no, that guy actually never paid me back, would you be inclined to give your friend money?
I wouldn't lend him money.
No. Yeah. And if you did, maybe it'd have to be heavily favored in your court to do so.
Absolutely. Okay, so that's cool. So now we've said this term, the bank, a couple times. Who is the bank?
The bank, there's multiple banks, and we deal with basically every lender and bank that we have.
So Canada, big banks, TD, RBC, Scotiabank, BMO, these guys. Okay.
Big ones.
So House of Cars doesn't actually lend money. We're not using our money to lend the vehicles.
Don't do any in-house financing. Actually, most of the times, in-house financing doesn't report to your bureau. So it's not really benefiting you by getting into a car loan.
So, and if it does not report to my bureau, then in theory, it does not benefit my credit.
No, and that's kind of goes against our whole credit rebuilding program and credit building, credit establishing program, right?
So the goal is to take somebody who might have, mediocre, subpar credit to a place where they have strong credit, where they can, do things like apply for mortgages, right? Qualify for prime rates, right? And now the other thing I'll point out here, prime rates. So you have the prime interest rate in Canada, which is constantly changing, right? Now, what happens is you have banks, so your big five banks, and all your other subprime lenders, they're also borrowing money, right? So the whole financial machine, people are borrowing money from other people, from other institutions, and it just trickles down the line, right? So when you have a prime Canada rate, right? And then you get into a prime auto loan. So for used vehicles, prime auto interest rates, right, go from 3.9 to 7.99% in most cases.
In a nutshell,
right?
Newer vehicles for sure.
And that's going to fluctuate a little bit, and it's so much dependent on the person, but you said on newer vehicles. So does the vehicle also impact the rate?
100%. Kilometers on it, the year of the vehicle, all come into, are contributing factors to the interest rate, right?
Why would a newer vehicle with lower mileage qualify for a lower interest rate than an older vehicle?
So you got to think in the bank side. So they think worst case scenario. So if you stop making your payments and they need to repo that car, now they have this asset, right?
By repo, what do you mean by that?
Repossess. So you stop making your payments, they took back the car.
Okay.
They went and collected the car back, you're not making payments.
Because the vehicle is actually the asset tied to the money.
Yes, exactly.
Cool.
Exactly. And then it goes against your credit and it'll show up that it was a voluntary or involuntary repo, whatever it may be. But they like to know that their asset is protected. So how fast they can sell that car or the reconditioning cost of doing so.
So if I'm purchasing a vehicle and I'm looking at something, one model year, it has factory warranty on it. That should get a lower interest rate than an older vehicle that has 150,000 Canada.
Yes, because of the warranty, right? So if there is issues with the car, the bank takes that into consideration. They're like, okay, well, if there's issues, we can just get it fixed.
This is a safer, more secured vehicle to lend our money on.
Exactly. Older car, 10 years old, high kilometers. There's no warranty on that, right? It's going to cost probably more to fix it if it does need to be fixed than what that car is actually worth on the market value.
So the dealership's role in all of this, we act more as the broker, right? So we're bridging the gap between consumer and lender.
We just make them be friends.
Right. So if you're doing your job properly, both people are happy.
Exactly.
Okay.
Exactly.
Cool. I like that. The second one that I get asked a lot is when I'm going over agreements with somebody. There's a couple different things that stand out. There's a principal amount of the loan, and then there's cost of borrowing.
Yes.
Okay. What's the difference between the two?
So the principal amount of the loan is what you actually owe back to the bank. Okay. So that's the money that you have the set term. So say it's your set years with your set payment schedule. That's how much money will be paid back to the bank after that term is done. Right? The cost of borrowing is how much it's costed you to use the bank's money for that time being. Okay. And all loans are actually open-ended for car loans financed.
Okay.
The only time you'd have more owing than what you actually owe to the bank is when it's like a lease.
Okay. So we'll dive into that in a second. So basically the cost of borrowing is the interest.
Yes.
So interest is going to be changing. So if I get a vehicle and the principal amount of the loan, right? So vehicle price plus GST, right, in Alberta, plus the cost of any warranties that you have purchased, right? So that would be the principal amount of loan. So that's all I'm actually entitled and obligated to pay back.
Yeah, that's your full responsibility.
So now if I take longer to pay the loan back, say if I keep the car for 7 years, and that's what my payments are, right? That means that I'm going to pay more interest than if I pay the car off in 4 years.
Exactly. And if you are paying it off early, like you're mentioning, you have a, say, 8-year finance or a 7-year finance, and you want to pay it off early, you can do so. There's no additional fees associated with financing the vehicle.
So that's what the term open-ended means.
Open-ended means that.
Okay. Exactly. So open-ended means that I can pay it off whenever I want to without penalty.
Exactly.
Right. So now if I take my minimum payment, say my payments are $100 every 2 weeks, right? Now, if I'm making those payments, that includes the interest charges on the assumption that I'm paying it off over the full term of the loan.
Exactly. Yes. And I'd like to say something too about the interest rate being charged, how it's calculated. It's actually called per diem. It's your daily interest and it accrues every day until your payment comes out. And then it wipes, the bank gets their money and then you pay off a portion of the principal as well.
So every day, so I make a payment, right? And then every day after that, until my next payment, my loan is actually increasing by a small amount.
Yes.
And then I make a payment and it chunks down again.
Exactly.
Okay, cool. So now the difference when you said lease. So this is another question that comes up all the time. There's two different types of loans. There's finance loans and there's leases, right? Traditionally, leases are over a shorter period of time, but you never actually own the vehicle.
It's like a long-term rental.
What happens? Can I pay a lease out early?
You can, but you will have a penalty. It's like breaking your lease, right? So there will be additional charges on what you agreed with them in your contract.
So because it's a shorter term and I'm giving the asset, the vehicle back at the end of it, I have to keep it for the full time or I'm facing penalties.
Exactly. Yes.
Okay.
And you have limitations on your kilometers, how much you can drive it a year. You can't do any aftermarket upgrades to it. It has to stay completely stock, or else it's breaking your lease and you'll have to pay additional costs.
So for most situations then, financing might be a better alternative.
100%, because you actually own the asset, right? You can do what you please with it. The lease, it's just the road of having the security of getting a new vehicle every 3 years.
It's a secured rental car.
That's it. You might as well just rent a car.
Gotcha. Now, that being said, if you are somebody who, owns a business, there are some tax advantages to doing a lease, right? So if you own a vehicle through a lease, that is a business asset. So if you have a company, you might want to explore a lease option because now you can use your payments to write off against the company.
Exactly. And we do leases, we do finances, cash deals, everything under the sun.
Really cool. Okay, so now I see a lot of advertising around for 0% financing.
Yes.
Is that a real thing?
The banks don't work for free. That's for sure.
You wouldn't lend money for free?
No, I would not.
Okay. I also wouldn't lend money for free.
Exactly.
So theoretically, yeah, that makes sense. So 0%, how does that work? Because we can do 0% loans.
We can, yeah. You can make any loan a 0% loan, but it's called a buy down from a bank. So I basically need to pay what you would initially pay. Say you have a 4% interest loan, 3.9. How much that cost of borrowing would be, I'd have to pay that amount in full at the beginning of that loan to get you 0%.
So what you're saying is in order to get 0%, I have to pay all the interest upfront.
Exactly.
So wouldn't it make more sense to take a loan with an interest rate and just pay it off faster?
Exactly. And then you're not stuck to paying that whole interest rate right off the bat.
So that's the way to actually pay less in interest over the term of the loan rather than getting a 0% rate and paying it all upfront.
Exactly. Yeah. And when you go to new dealerships and they offer the 0% financing, they've paid a portion of the money to buy down the interest rate, but it's only on select vehicles. Usually you have to pay full MSRP because they need to attach that cost somewhere, right?
So what they're doing is it's more so an advertising thing.
Exactly.
Right. So you can advertise 0% to bring people in, to generate, to pique people's interest. But ultimately, from a consumer standpoint, it's oftentimes better to take the rate.
100%. Such a low interest rate, 3.9, 4.9.
Absolutely.
Maybe, right?
So now on people, so you talked a little bit about it with the credit building process, right? So that's something that House of Cars has kind of been the bread and butter, right? That's how we got started. That's how we established ourselves. We do work full spectrum. So we do work with every prime bank in the country. As well, we have a lot of subprime lenders. So what's the difference, Nick, between a prime loan and a subprime loan?
So prime loan, basically, those are people dealing with the best credit possible, right? So people with
they've already built that trust, that financial trust.
Yeah, they've already built that, and they're going to qualify for the best rate on an array of vehicles. Mm-hmm. And when you go subprime, the bank looks at your entire file, they pick the interest rate, they give you a monthly budget, and then it's the finance manager at the dealership to help find a vehicle that'll fit that. So the bank has more control on a subprime side, whereas on a prime side, they're more lenient on what they're going to do.
So now when you say more control, are they going to look for more things? Like, are they going to ask for things like pay stubs to be proven, to like verify people's income and stuff like that?
100%, because you have a track record, if you are on the subprime side, of not paying people back on time, right? So they want to make sure that you're earning the money that you say you're earning. Whereas on the prime side, you're going to have the luxury of not having to go through that. It's going to be a quick approval. You apply today, drive today. It's one of the big slogans, right?
Cool. Now, so on the other side of that, so say I come in, I'm looking at a vehicle and I want to finance this car. Let's call it, a 2005 Honda Civic, right? Yeah. I'm really interested in this car. It has a low purchase price, right? So I want to, as a consumer, finance that vehicle.
Just to get the lower payments, right?
Mm-hmm. Because a lot of people, will think low purchase price, older car equals lower payments. Exactly. Is that reality?
That is not reality. So all the banks actually have their terms that they give out, and it's based off the year of the vehicle. And as you go back older, the term of the vehicle gets shorter of how long they're going to lend against that vehicle. So when you have an older vehicle, yeah, the price might be cheap, but they're not going to give you the money for it. They're not going to help you lend it. So that's when you have to buy that car cash.
So in that position, then the vehicle itself is too high risk for the bank to lend money against it.
Yes, exactly. Right? Because they think, once again, about pulling that car back, repossessing it, and how much it's going to cost to recondition it and sell it so they can get out of the loan.
Okay. So what are some alternatives then, rather than going traditional financing, if I want to purchase a vehicle that is a little bit older?
You could go to your bank and get a line of credit if you don't have the cash. Obviously, purchasing cash is the easiest route, but going the line of credit, yeah, I'd say that. We do have some lenders that will go back further than, say, the prime lenders and give you an actual term finance term on a motor vehicle.
So it is possible, but you're saying there's a whole lot more hoops to jump through.
A lot of hoops to jump through.
Gotcha.
Yeah.
So in that case, it is often easier to go into something that is a little newer.
Yep, for
cool.
sure. Well, you get under warranty. Usually you can get payments lower than what they would actually be on an older vehicle, right? And
because you're getting a lower interest rate because the vehicle itself is low risk.
It's a high equity vehicle to the bank, right? It makes sense for them to lend against it.
Makes sense. Okay, so now what other protections are in place? So I know a concern that I hear a lot of is, I got hammered into this car.
Yeah.
Right. Now, banks have restrictions in place that prevent dealerships from selling a car for whatever they want to.
Exactly.
Right. What are those? So
the max that the bank will lend against a vehicle is 140% of the black book value. So if a car, what they deem as $10,000 is the black book value, they'll only lend $14,000, up to $14,000.
And that has to include any, trade-in equity and things like that.
Everything. Yeah. The total price can only be $14,000.
So I can't go out and, pick a 2005 Honda Civic. Let's use that model again. I can't go in and I can't sell that car for $30,000.
No.
Okay. So those are protections in place to protect, both the dealership, the bank, and the consumer.
Exactly.
Okay.
Yeah, it's all everything. The banks have the terms and their financing figured out on that side. It's our job to find the right vehicle for the customer and help educate them on what the right move for the situation would be.
So again, going back into it, the dealership is simply the broker bridging the gap between the institution with the money and the consumer who needs the product.
Exactly. Yes. And we're here on the consumer side to help them get the lowest interest rate from the bank, right? We don't make money off the interest rate.
Why would we fight to get the consumer a better interest rate?
Well, give them a better starting place on that loan so they can pay it off quicker by not paying the majority of the payment to interest. And then also giving them a lower interest rate off the bat helps with their payments, right? So if they're budget conscious and they can only afford so much, beating the bank up over their rates is the best thing you can do.
Now, also in that same topic, if we get somebody a lower interest rate, right? So that means more of their money that they're spending is going towards that principal amount of the loan rather than being paid to interest.
Yes.
Right? So theoretically, then should the customer come back a year later and want to trade their vehicle, the lower their interest rate means the lower the principal amount of their loan will be at that time.
Exactly, because they knocked down the principal amount of the loan quicker, right?
Cool.
And so even within a year, usually when we do refinances, to get people back in a year, we get them back to lower their interest rate because most banks have a 12-month loyalty program where they'll drop your interest rate, but you have to go back into your dealership and refinance with them.
Refinance meaning?
So basically you have the same car, you go back to a different lender maybe, and they're inclined to give you a better rate on it because now they can see 12 months of payment history on a car loan that's been paid well.
So over the last 12 months now, consumer has built trust, shown that they can make their payments. Now they're going to qualify for a lower interest rate.
Exactly. It's that easy.
Cool. That's simple. And, that's something that a lot of places will not explain, right?
No.
A lot of times you go into somewhere and it's, here's your vehicle, here's your payment, right? Take it or leave it type thing. So House of Cars does a good job of actually explaining that whole process, right?
Exactly.
And educating people on here's a credit bureau. Here's what it looks like. Here's what's benefiting you. Here's what's not benefiting you, right? If you want to qualify for better rates, better approvals, which ultimately means better vehicles, right? If you can get a better interest rate and you have more trust with the bank, they're going to be able to lend you a little bit more money, which might mean getting a better vehicle or a nicer vehicle or something, right?
Exactly. And the thing that kind of sets House of Cars away or above the other dealerships, in my opinion, is because we take the time to actually go through people's credit. And
so how important is that step in the whole car buying process?
It's huge. If you're being presented with something and you don't understand it, you're not going to go for it and say purchase it or just go with what the person's saying, unless you trust them and they're a friend of yours or whatever it may be.
For sure.
But going through someone's credit with them and explaining where they're at and how the bank views them, because the banks unfortunately don't take stories. We'll take stories all day, we'll listen to people, and then it's our job to go to the bank and try to present it the best way possible. So give them the best
the right way.
Exactly, right?
Cool.
So we work for the customers in doing that, right?
Really cool. So I know there are a lot of people out there that don't understand this whole thing. Right, the whole financing thing is kind of a scary topic to bring up because it's not talked about. There's no readily available information out there.
Yeah, and the scary thing is too, I go around and talk to people and they don't even know what bank they're financed with or what their finance rate is. And so we take the time to actually go through it, and explain everything top to bottom with them.
Cool.
And so it's quite memorable every time they come back. They're like, what bank? It's like, they know RBC financed me at 3.9.
Cool. That's awesome. Now, so a couple other things that I want to touch on in this, because you have, every car has warranty on it, right? So if you...
The newer ones for sure.
The newer ones, exactly. So every manufacturer, and by manufacturer, I mean a brand. So, Ford or Chevy or Toyota or, BMW or Lexus, whatever the brand might be, each individual company has a warranty attached to that car. Yeah. Does that warranty continue if the vehicle is sold to a second person?
100%. It's attached to the VIN.
As long as it is within a certain parameters, right?
Yeah. So say Ford, for example, it'll be a 3-year or 60,000 kilometer warranty. That'll be the full limited warranty. That'll cover
the whole car.
Basically the entire car, minus your wear and tear items, like say brakes or oil change.
Windshield, if I smash my windshield.
Yeah, I'm not going to cover that. And then a 5-year, 100,000 kilometer powertrain, whichever comes first. And that warranty starts from the manufacturer's date. And the manufacturer's date of the in-service is actually the first date you'd see on a car proof.
So when the first owner registers the vehicle.
Yes.
Cool. And so that warranty will be in play no matter who owns the car. It follows the car around.
Exactly. And if you're never sure about your warranty and you do own a newer vehicle, call into a dealership, the manufacturer, give them your VIN number, give them the current kilometers, and they'll tell you how much warranty you have left and what's covered.
Cool. So now how do extended warranties play into that? Because oftentimes, people are buying a used vehicle because they don't want to take that initial loss, right? Because it's a pretty well-known fact when you buy something that's brand new, as soon as you drive it off the lot, you're losing a ton of value, right?
Exactly.
So extended warranties will add value to the entire loan because it makes the car more desirable in the eyes of the bank.
Exactly. Yeah. They're securing their asset, right?
Mm-hmm.
Banks, we can all agree, they just care about their money.
Yep, absolutely.
how it's getting back to them and how it's being played.
Absolutely.
So if you have an extended warranty on a vehicle, they're going to be inclined to give you a lower interest rate on it because once again, if they're to take back that vehicle, it's probably going to be well maintained because it has the warranty behind it. It's not going to have any issues.
There's a higher likelihood that there's nothing wrong with the car.
Exactly.
Cool. So now there's another one that comes into play, and this is my favorite product actually, and I try and pitch everybody on this, is gap insurance.
Yes, guaranteed asset protection.
So gap insurance is an insurance product that covers money on the loan should anything happen to the car, correct?
Exactly. So
if I were in a collision, say I'm driving and it's snowy out and I can't stop, or I get rear-ended, right? And my car ends up getting written off, right? Now, I know dozens of people who have had this happen to them, and they go and they make a claim through their insurance company, and their insurance company says, well, we're only giving you $15,000 for the vehicle, but I owe $25,000 on the vehicle.
What do you do?
Right? So now I'm stuck making payments on something that doesn't exist anymore. Exactly. Or I have to fork over $10,000, and I don't have $10,000 lying around to just dump on a car that doesn't exist anymore. Right?
Never fun.
So what would that do?
The gap protection would secure your loan. So say you get in an accident, the bank will only pay you out $15,000. You owe $25,000. So that gap of $10,000 of what you owe back to the bank now, the gap protection will cover $50,000 of difference.
So that whole loan is gone. I can dust my hands with it.
Yeah.
Cool.
100%.
That's one of my favorite products, right? And that's something that I think has so much value just because we do live in a world where people get in car crashes. It happens all the time. Or your car gets stolen, right? Something happens.
We were one of the first dealerships to actually sell the gap coverage at House of Cars Barlow. And the girl came in with a Jeep and she had $20,000 in negative equity. And we sold her the gap coverage. She got a new car. Still has $20,000 negative equity. Leaving the dealership, I think that later that day, she got T-boned in an intersection.
Wow.
Wrote off the entire car, paid off the $20,000 negative equity. She came back and thank God she was fine.
Yeah.
And she came back, bought another vehicle off us. She was very happy because now her debt's all gone.
That's awesome.
Yeah.
That's so cool.
Gave her a wicked deal on the next vehicle. She's sitting happy.
So there's a bunch of different ways to add value or decrease value in the loan, in the vehicle, right? So that's our job, the dealership's job, their responsibility, you could say, to provide that information, right?
Exactly.
Cool.
Yeah.
Really cool. Anything else you want to talk about on this front as far as, the process? Maybe you can explain to me kind of start to finish what the House of Cars process is. Pretend I'm walking in, I walk into the store, what is my experience going to be like?
Well, first of all, when you walk in the store, you'll be greeted by probably everybody in the building.
Okay, cool.
You'll be offered coffee, waters, tea. You're
good.
going to feel like you're at home. I actually have people that don't want to leave the dealership. They just want to hang out all day.
Cool.
So the vibe, as soon as you come in, the energy's high. It kind of breaks that initial barrier of walking into a dealership, right?
Absolutely.
So it could be a
because that can be a stressful experience.
Oh, for sure. Yeah, like I get nervous walking into big dealerships. You know what I mean?
Mm-hmm.
Like
you walk in, your head low, and you're
you got like
okay, nobody talk to me.
Can you help me? No, and then it's like, well, you walk in those cars, it's like all our buildings are completely open.
Yeah.
And so you walk in, you see the manager sitting there. Usually owners are walking around.
So it's pretty inviting.
How often do you even walk into a car dealership and you meet the owner of it?
Very rarely.
Even like, say even the manager will step in once in a while, but like we're all so together. Like I'll come greet people at the door, making sure that their needs are met, and we can give them coffee, water, tea, whatever it is. I offer people foot rubs half the time.
That's weird. I don't know if we can do that with all these social distancing rules in place right now. We might have to accentuate the foot rubs, but I appreciate the offer. Okay, so after that, so now I've gone down. I've come in to look at a specific car.
Yes.
Right now, what happens?
So a couple options. We'll ask you if you want to take it for a test drive. You want to look at it. If you want to take it for a test drive, we'll grab your driver's license, take a photocopy of it, make sure that you're legal to drive the car, first of all, because we've had people come in and they actually haven't had driver's licenses, and that's just a no-go.
Yeah, that doesn't happen. So now I've looked at the car. Seems interesting to me. I want to finance it.
Perfect.
What
Sit
happens?
down with one of our fantastic sales consultants.
Okay.
They'll walk you through an application.
Okay.
So just basic info, where you work, where you live, what's your birthday, phone number.
Now, why would I need all that information in order to get financing in place?
So the bank knows who you are, right? They can match their the information that you're giving us with what they may have on file, right? Because when you do pull credit and you see your credit bureau, all your information will be on there. So if the information that you're giving us is off, that might lead to fraud.
Right. So now that's another big word, and we can dive into that in a second after that. So the bank needs to kind of build a profile for me so that they are educated to make a decision on whether yes to lend money to this person or no not to.
Exactly, because the banks look at basically the entire picture as a whole. So how much money you earn, how much money you have in debt, and what you're trying to obtain, right? So am I buying this $100,000 BMW? Does it make sense when I make X amount of dollars a month when it doesn't look like I can afford it on paper?
Gotcha.
So maybe the finance manager at the dealership will point you in a direction of something that will make more sense for your financials, right?
Gotcha. Cool. That's really cool. So now after that, I've done the application. Will you go over my credit with me? Can we get on the same page about
basically,
that?
the sales guy will bring it to a manager, and then we'll pull the credit, and we'll go back to the customer, walk them through the entire credit, top to bottom, give them tips. Lots of times people don't even know half the stuff that's on their credit.
Absolutely.
Say they had a collection for World Health that they had no idea about, and that was really driving down their credit.
It might be for $100 or something that's really easy to just go and take care of.
That I know you dealt with, that he had a Good Life membership. Do you remember that?
Oh, you know what? The number of people that I see with collections from gyms is staggering.
But you're actually able to get it off his bureau.
Yep.
And this guy's credit went through the roof.
Absolutely. We went into the actual gym together. I went there with this guy. We walked in, and he had been fighting with them to try and get this removed because they had signed him up, and he was, I think he was too young to actually sign a contract on that. And they were holding him obligated to this. So we went in, and we were able to chat. We were able to get that whole thing removed from his bureau. And now he ended up going from a subprime loan, and now he was able to qualify for a prime loan.
Yeah, we'll go to bat for you. We'll go back for customers all the time.
For sure.
No problem.
So after I've gone through my credit, now what?
So then if the credit's good, and we make sure we can get the vehicle.
We make sure we can get the approval.
Yeah, we make sure we get the approval. Then it kind of follows the process there. So it depends what bank it is, and if they require income, then we'll ask the customer for income. Maybe they want to picture their driver's license up front, something like that. We'll follow the bank's stipulations on that, and then get them the vehicle as fast as possible.
Now, is it possible and feasible for me to walk into a house of cars and drive away with something the same day?
100%.
Cool.
The fastest deal I think I've done is under an hour.
Really?
Yes.
That's awesome.
The people were
That's fantastic.
jumping with joy.
That's amazing.
Yeah.
That's really cool. Okay, so basically just to summarize this whole thing then, I walk into the store, I greeted, we take a look at the car, we do the application. I get shown my credit. We figure out a game plan, whether, you know what, this works today, or we've put something in place that this works for next year and here's what works today.
Exactly.
Right? We discuss payments. We make sure everything makes sense. It seems like a pretty straightforward process.
It's bulletproof.
Right. So when all the information is available and this is being explained to me, that should take away a lot of the, you know, the reservations and fears of walking into it.
Exactly.
It should be a pretty comfortable experience.
I think one of the biggest fears that people have is not knowing what they're walking
the
into.
Uncertainty, it's crazy.
But when you walk into a house of cars dealership, you see the sales staff and how eager they are to help you out and walk you through the entire process. Whether that's maybe 2 years later, you're looking for new insurance and you were the person that helped them set up, no problem. We'll help you with that. I've actually helped someone who was buying a car in Airdrie. They came into our dealership and they were wanting to look at another vehicle. And Airdrie sent them down. But in the meantime, they were trying to get insurance quotes by themselves. And they're like, we're not sure if we can do the deal. But I'm like, well, why don't we just see if we can ship it off to our brokers?
Let's see if we can get it done.
And we beat their insurance by like 50% or something.
That's crazy. That's crazy. That's a huge difference. And that's awesome. Well, thanks for coming by again. It's really nice to break down, you know, the ins and outs and how the actual financing process is put together. Yeah. I really appreciate all your insight in that, and we'll see you next time.
Pleasure. Thank you.
All right. Yeah.